Hey everybody, it's me, Deion Santa Wall Street, out front of the New York Stock Exchange. Infinite possibilities. It's a beautiful day to be alive. Great day to be in the market. Market's trading at record highs. It is a Friday in August. All that talk about, like seasonality, forget about it. We've never been so busy in our lives. We are now on the 23rd record high of this year. We always talked about it. 2024, we had 58 record closes in a year of 218 trading days. We're already at the 23rd. All that's going on, we've got tariffs, we've got economic data, we've got the Fed, we've got the president speaking to Putin. There are so many pieces of this puzzle. All of them are having some impact on inflation, tariffs, the market, the economy. Who's better to break this all down than my man Dan Ives, the #1 tech analyst in the world?
Dude.
My man Dan Ives. Let's stop the presses. Can we talk for a moment? The best dressed man on Wall Street, #1. The smartest man on Wall Street, #2. And this is the new drip. Forget about it. You guys are going to stand in line for this drop of drip. Yeah, that's a drip of a drop.
This is my collab with Snow Milk.
Collab with Snow Milk.
Great Brooklyn designer. We've been doing this, the last few months designing it. And you get on danivesclothing.com.
danivesclothing.com. Dude, I'm getting goose. I'm kvelling. I'm kvelling over it.
So good.
So talk to me. Like, we've got all this economic data coming out. We had that funny week. We had Wednesday where the Fed had an opportunity to pivot and they didn't. You didn't think they should have. I thought they should have. There was dissent amongst the ranks. That day was the day that 2 Fed governors did dissent. First time since '83. That's all fine and good. Why didn't he pivot? Well, he did pivot in a way, but look, he did not cut and he did not give us an inkling what was going to happen in September. However, 2 days later, we started the barrage of economic data coming in, like jobs number, worse than expected, unemployment ticking up.
And that proved that the centers were right when that job data came out.
Say that again?
When that weak job data came out
on Friday,
that proved that the centers basically were right.
Okay. The dissenters. Yep. Correct. So think about that. So 2 of the Fed governors disagreed with Powell to not cut. They felt we should have had a cut. And that was validated 2 days later by the fact that the data that came out and has come out since, PPI, CPI, unemployment, and those jobs numbers validate that they were right. The dissenters were right. Now, where does that put us? It spiked up. The probability of a cut spiked to 90%.
Yep. But then, ultimately, if you look, we'll see in Jackson Hole with Powell in his speech, but now I believe it's pretty clear Fed's going to cut in September, so you're going to get 125 bip cut.
Just 25.
But then we probably get either another 1, potentially 2 more rest of the year.
So 3 cuts by the end of the year. And look, we're not advising you on anything. We're not telling you what to do. But Dan has an amazing ability on analyzing this information, and it's a lot. It's economical. Let's think for a minute. So Bessent, right? Ludnick and Bessent, done, deal, has called for 150 point cut. Yeah. Now, do you think by year end we'll have all that?
You probably get 50 bips by year end,
right?
And then by early next year, 75 bips. So I would say half of what they're calling for, you probably get by early 26.
Okay.
Now look, some of the data that came out this week on PPI and the produced, that definitely showed a spike. The question is, does that cause the Fed to take a step back? And I don't believe so. I believe that's one. I'll be afraid to call it transitory because obviously the tariff impacts are starting to happen.
Well, we're seeing that the tariff impact is notable on inflation with the PPI that came out, right?
Totally. So I think that's starting to happen. But basically, Fed at this point is like, look, we get it. But based on, if you look at just all of the sort of signs, slowing growth, economic picture, Fed's basically going to have to cut at least twice, potentially a third time. And I think that's the reality now that the market's pricing in.
Okay, well, that's not a bad thing. Higher rates for longer doesn't serve anybody. The reason they held back on the cuts was that fear of stagflation with low growth, no growth landscape, right? Well, so where are we now, Dan? We are now, we're knee deep in the third quarter. We've had earnings blowout. We have guidance that's super good. We have the Fed that's sort of positioning itself for a couple of cuts. Where do we go from here? What are you seeing, and how is tech situated in the middle of all this?
Look, I mean, you've talked about, like, if you think about this earnings season,
right?
It was really a blowout for tech.
Blowout for tech.
I mean, so it's really showing that, like, CapEx, like, Microsoft goes from 80 billion to 120 billion.
Right.
Like, Meta ups CapEx.
Right. Even Apple.
Well, and even Apple has more and more pressure in terms of them needing to basically do something when it comes to AI. So I think what it's showing is the use cases are blowing out.
Right.
Consumer, you're going to start to see those use cases come through. Sovereigns are now coming to the table. Middle East, U.S. government, names like Palantir clearly benefit as well. Look, you put that together with the China restrictions. White House basically saying you got to pay 15% to the House in order to sell chips into China.
Right.
That was, if there was one thing that was going to ruin this AI party 10 p.m. that goes to 4 a.m. It was the China chip restrictions.
Right.
The last thing you want to do was Nvidia to hand Huawei on a silver platter 15 to 20 billion a year.
Correct.
White House is basically like, hey, you want to sell your third, fourth best chip?
Right.
Pay us 15%?
And we'll let you sell it.
Fine.
Right.
And to me, now that happened, it's new rules of the game, but that's bullish, what I believe, going to year end.
So it's so fascinating. So you're basically, you know what, they're negotiating. They're actually talking to each other, and they're pivoting, right? And that's important. Look, at the end of the day, everybody needs to be happy. Everyone should get up from the sandbox and take their ball and go home in a happy mode. It's better to be happy than right. And so I think that's what's happening here. And so if Nvidia's happy, they get to sell what they want, the House gets paid, then you got Trump is happy. Nvidia's happy. We don't give up 20 billion to Huawei, and we've got a lot else going on.
Look, and I think we'll definitely have some speed bumps, geopolitical Fed.
Right.
But to me, it always goes back to what we've talked about, like the trajectory of NASDAQ to 25,000.
Right.
And S&P to 7,000.
Right.
I think it's still there as we go into year end. Now NASDAQ's probably 23 and a half, but I continue to believe this tech bull market, you're still only in the second, maybe third inning of where it goes.
You know what, look, we've talked about this for the last couple of years. We are in the midst of a tech revolution. The tech is not carrying the market, but it is a huge participant. And you have to realize, I just was speaking with a couple of young people inside to know that AI is not going to outsource human beings. AI is going to be making our lives that much better. Whether you ride in an autonomous car or it helps you in your surgery, God forbid you get sick and the doctor's able to get all the information they need, or you're going to be someone who's investing in a company that's second and tertiary derivative of the play in building the data centers and all that kind of stuff. There's so much opportunity, infinite opportunity.
And it's the derivatives. Nvidia chips,
right?
Software, cybersecurity, everything we're talking about in the Ives AI 30.
The Ives AI 30, you better dig on that.
And it's about energy, grid,
right?
Nuclear. It's about, for every dollar spent on an Nvidia chip, there's an $8 to $10 multiplier across the rest of tech.
Really? Wow.
That to me is the whole key.
That's the foundation.
That's the foundation. I mean, if you think about it, you're essentially building Dubai, Vegas, from the ground up,
right,
in the desert,
right.
The AI infrastructure, that's essentially what's happening.
So, I mean, if you think about that, look, we know that the market can be sector bound, right? We know that we don't want one sector to be holding the market up. But when Dan describes this, that you've got the Mag 7 that's blown everybody out of the water, the fact that it's also forced a lot of these companies, the tech companies, to actually be investing back in America. Apple putting $600 billion in, Nvidia putting $500 billion in. There's that. There's a secondary and tertiary trade, right, within the AI space, talking about energy, about cyber, about all those things that go in to the building of this infrastructure that is AI. It's not just, the Jetsons flying around on a bunch of autonomous, it's not like having the robot at home making you pancakes for breakfast. It's way deeper than that.
And that to me is the core of the whole bull market. Because it's like everything that's happening in tech, Fed cuts, that sets up for like a pretty bullish scenario.
And once again, we're going to have 2023 up 23.8%, 2024 up 23.2%, 2025, we're setting the stage, we're up 100% since COVID.
But I don't believe it stopped. It's like
No, I get that.
And I think we're still 1996,
right?
Relative to .com,
right?
Not 1999.
Right.
But I don't believe there's like a crash. You could have digestion of CapEx and some other stuff.
Right.
But to me, that's a pretty great setup.
So let's just kind of tie in. The PPI number came in. That's an inflation trigger, signal, right? Production price index. That means that people are paying more to make stuff, right? Now, we also saw that Amazon, right, had good earnings, good guidance, yet the stock went initially down. Yeah. And that was a function of the thing that they're absorbing a lot of the tariff expense themselves. Are we seeing more companies do that or more passing it on to the consumer?
Absorbing, but now you're starting to see pass it to the consumer.
Really? And that's why inflation is going up.
Exactly.
Yes.
And I think this week, especially with vegetables and other,
right.
It was the first sign. You have to talk about this for months, CNN,
right.
It's the first sign now that as the deliveries are coming to the port,
right,
and then they're going to the grocery
right.
stores, you're starting to now see some of that price.
So are we going to have an interruption of the supply chain, or are we just going to see higher prices, whether it's the knapsack that you buy your kid and the back to school sale at Kmart, or is it going to be the eggs that you're paying for your breakfast with the family?
I view it more just as higher prices
across the board
rather than some sort of
interruption.
All
right, so net, what is going to happen is that at the end of the day, while it looked really dark and dirty during February, March, April, with a potential economic Armageddon, to quote Mr. Ives, is not going to happen. The prices are going to be, some of them are going to be absorbed by the companies, some are going to be impacted onto the consumer. We will deal. We'll get through this. We've gone through it before.
And I think that's a bullish scenario.
Yeah.
Relative to where we were in April,
correct.
May,
yep.
Fed, Trump, Powell, hard hat.
Right. You know what? You got to look. Never take yourself too seriously. We are in the middle of a revolution. It's a good revolution, right? Started way back in the day with George and Alexander Hamilton and all that kind of wild stuff. But we're in it now from this perspective. That tech and AR are here to stay. Bitcoin, 124,000. That's so. Do you have any opinion on Bitcoin? We've never talked about Bitcoin.
My view is like crypto assets.
Right.
It is good. It's a very bullish scenario for crypto because it's a deregulatory environment.
Yes.
And I think whether it's Bitcoin, Ethereum, or some other
right.
coins, you're also starting to see institutional interest.
Right, 100% across the board.
And
complete acceptance.
And I also think deregulatory, risk-on environment.
Right.
It's a bullish scenario for ultimately what I see is crypto assets.
You know what? Look, we're painting a picture here of a world that's at your fingertips, right? That if you're not involved, if you're not investing in stocks and you're investing in stuff, you're making a mistake. We're presenting you with a scenario where the world is just blossoming once again. Things look shaky for a while, but we're in the midst of a really positive revolution. Our lives are going to be changing in a really positive way. The market's foundation is super strong, and we're in a good place. And we're in a good place when Dan Ives comes out with his own clothing line, as do I.
But not a top, a good place.
No, a good place, not a top. We're not talking It's not frothy. It's not toppy. It is the best dressed man on Wall Street. Dan Ives, check this thing out. And then you got me. You're talking the house.
This thing.
The house of Albert Couture, baby. We are the best dressed men on Wall Street. You got to dig it. And if you don't like it, have a nice day. We love you anyway. And that's all I got to say about that.